Hey everyone, I'm back here with another recap of today. I had a bunch of plans. I had a couple, well, quite a few names actually. Um, try and attempt those plans, and I'm gonna go over them and see which ones worked, which ones didn't, and some are obviously higher quality than others. But I'm here to explain that all, and let's just get right into it. All right, so first things first, we look at NQ here. I had the idea that if we were gonna get above this 1 hour use supply here, I guess it would be right around this 15,177 area. Um, that we could easily target up to the further supply and even test, back to 15,472, even that area. I think if we were going to get above this supply, we were going to rip through these three supplies ahead. If not, we were going to have either a range bound day or just continue selling off. My initial analogy from last night's session of planning was a range bound, and that's exactly what we got today. And that was mainly because of anticipation of the Fed meeting, and I also think that this was a huge drop. We needed some kind of consolidation. We obviously aren't going to have a huge bounce back up. Of course, this market is crazy and it does weird things, but I just didn't, for some reason, it was a gut feeling that we were going to have a range bound day, just because we had, shorts covering and all that fun stuff. But anyway, that was my analysis on the NASDAQ. If I just go back real quick, and we really would have liked to see buyers sort of defend this 3 hour, which is exactly what we saw, and we looked like we are going to have a little bit of push and test this 15,151 area, but that's not exactly what happened. Oh well. And we immediately actually rejected this resistance here at 15,100 and kind of just chopped around the rest of the day and are now currently selling off. Going into tomorrow, this is a key demand. I think that this move is not done yet, and we are going to probably slice through this important demand and make our way down to 14,728, that area. But if not, this is a key area of buyers that they need to defend. They need to reclaim 15,000, and then I think if we double bottom in this area, I think we have a good chance of testing the 15,151 area and then hopefully recover back. But obviously, I'm not a fortune teller, and I don't know what's going to happen. Same thing, similar stuff on the ES. Let's just go over that real quick. Same thing, not as convoluted, but same idea here. I think this is a key area of demand here that buyers need to step in at. 43.25 and below, down to 4,300 is where we're going to want to see buyers step in and sort of propel ourselves back up to the good gains. But if we can't defend this area, this 43.25 down to 4,300, we're easily going to fall down to 42.74 area, and then below, which I don't know, something tells me it's going to happen, but we shall see. We could just turn around. We need to get back above this 43.70 area. I think once we can reclaim that level, we'll be looking good again. 43.90, 4,400. I think we can easily test this 4 hour supply and above, and hopefully see new all-time highs. But again, we are going to see. I think with this move isn't done yet. I think we're going to see another leg down, and then some, and then we're going to recover slowly back. Hopefully by the end of the year. All right, so let's get into the plays. First and foremost, we had Apple, which was probably my most confusing setup. I really am still confuzzled, if that's a word. I know it's not, but I'm going to say confuzzled because I like it. I don't really know what my entry and exit. I mean, I know what my entry would have been, but I don't know how. I guess it just didn't work out. I thought it was a nice looking play. The level was 144.5. As you can see, it acted as many areas of support and resistance. Might not have been the best level now that I look at it. I want to say it might not have been the cleanest. So actually, given that analysis, I think that this was kind of like a forced trade. So I think that the setups really need to be a lot cleaner than this. You can see that in this area, which I'll just show you that, it's not exactly, it was kind of me just kind of guessing for a level here. You can see, touches here, but not really exactly 144.5, which is, I think, where I got caught up on. I saw this beautiful wick, or this beautiful candle that touched nearly perfectly, or actually touched perfectly on this 144.5 area, and then again here. And I know that there's supply up here because of this large upper wick, which I think I should have obviously waited for the break of this, but that's also where retail is chasing. And then we've got supply here. So the idea, was breaking this level and heading to this gap fill. But then again, sellers need to defend this. So I think it was a risky trade given that context. However, the entry was nice. Again, I didn't take any of these trades given, again, I've been studying abroad and the time difference is wonky with my schedule. So I can't really be around for opening bell, which really sucks, but I'm hoping this helps me learn as well. So the entry would have been this 5-minute RBNR, right as we broke here. I like, this is a nice strong candle with decent volume. I would have liked to see a little bit more volume, a little bit more follow through, obviously. And I think that's kind of what costed me here. If you take a look, the volume really isn't that much different than previous days. So that's another thing that I probably should consider. The volume wasn't significant, therefore it's a lower probability trade. And I think that's all there is to it. The level wasn't great. Volume wasn't great. Just because there's a 5-minute RBNR doesn't mean you got to take it. And it obviously costed me here. The entry would have been above here at the break of this 5-minute RBNR, and the exit would have been a close below this level. I looked at the contracts. I probably would have lost about, I think it was like 20, 30 cents a contract, which isn't terrible in the grand scheme of things, but they do start to add up. If we saw an explosive move to the upside with, the futures following, which is what I'll show here, right around, maximize sell. We saw it right around here. Actually, you know what? Let's just not maximize sell. I don't even know how to do this right now. Let's just do this. Okay. And if we look at Apple compared to the NASDAQ, we're going to see the relative strength, or what it would look like, and it was kind of similar. And you can see that Apple had a failed RBNR, whereas NASDAQ did not even complete the RBNR and just immediately sold off like that. And that's, again, why we, and we were at this important trend line too. So that's another thing to look out for. So given that context, obviously this was a bad trade and easily avoidable. And if this worked out, oh well. The confirmations were not there, even though, it was like a blind confirmation. Anyway, let's move on. Don't want to make this video too long. All right, next one was AMD. Let's go over here to the main chart. We had the level of 103. I probably wouldn't have taken this trade just because it's past when I trade, but I wanted to go over it anyway just because of the volume spike. And the reasons why I wouldn't have taken this trade. First and foremost, it's past the time I like to trade where volume, this is FOMO hour right at 12. We did have a nice volume spike, a little bit, nothing too crazy, and it would have costed me money. So just as a general rule of thumb, obviously don't trade past 11:30, 11:45-ish, really, 12 o'clock is when lunch hour kicks in, and it would have obviously costed me money. I would have entered right at the break of this 103 after seeing a volume spike. I would have liked to see some continuation. We didn't get it. And after that, I probably would have exited right at, 10 minutes later for about a 7, it was like 10 cents a contract that I would have lost on this one. So it would have been, a small loss on this, which is totally fine. I would have liked to see more momentum. If we look at AMD compared to the NASDAQ, just real quick on where I would have entered, you can see that it's, again, hitting this trend line. So I would have liked the NASDAQ to break this trend line first and then see AMD follow. Easy one right there to avoid, just given the fact that it was past the time I would like to trade at, because it would not have provided a high probability setup. If it worked out, oh well. All right. Snapchat, I have a couple question marks here. Simply because, excuse me, we were playing some games around this level. I would not have taken this, just wanted to go over it. You can see that we're chopping around here. Maybe you say, all right, we have some lower wicks here, and it broke the level again. Maybe I would have taken it here. Obviously, my answer to that is no, because just look at the volume here. We're playing some games. It's nothing too crazy, and it's just chopping around, and we're approaching a somewhat of a major trend line as well, and that wouldn't have been good. And yeah, so just nothing good about that trade there. Disney, I think, would have been the winner of the day, or probably the best quality trade, simply because it had the best relative strength, and I would have scaled out somewhat aggressively just because this market is kind of wonky. The only red flag I see here is the volume. However, the volume kind of contradicted the outcome, of course, as you can see. But let's just go over it real quick. My entry would have, the level is 181. My entry would have been probably, right, this rocket ship technique here that I always preach. We came down, tested VWAP, bounced right off, and that's probably when I would have entered. I probably would have scaled immediately after this push at 182, maybe even 181.5. As soon as I see this upper wick here, I'm going to scale out almost all my contracts and maybe leave one or two. And then if we can't move any higher after this wick and test this major trend line up here, then that's when I'm going to exit my full position. So I probably would have gained about 15-20% on this trade, which would have been a decent size gain. And that is the kind of trades that I want to look for. And then obviously you can see that Disney absolutely just fell off a cliff. And yeah, which is absurd because of news, of course. And COVID-related stuff. Again, the key thing is volume was not super nice here, and which was concerning. However, I probably would have played smaller size, given that we were bouncing off VWAP. And if we just look at what ES was doing at the time of Disney, I'm not too sure if it follows ES, but just it's always a good indicator to look at the relative strength here. As you can see. We have, at the time of the possible trade, we have ES struggling with VWAP a little bit, kind of chopping around. So it would have been good if ES took off a little bit and Disney kind of rejected. So that's probably what I would have scaled. But you can clearly see that Disney has relative strength compared to the ES. So that would have been a decent trade. Even with the lack of volume, you could see that you're kind of anticipating this 181 break, and that would have been a decent trade. So that was probably going to be the happiest trade of the day for me. And let's look at BA. BA was a bit of a doozy, but again, it would have been a good trade. I would have entered right at this rocket ship here, or as soon as we broke the 211. We had clear relative strength, a nice, strong looking green candle. Volume was not the best again. But we were holding above VWAP. We kind of bounced off it a little here, and we kind of took off. And I probably would have entered right here at 935 and scaled immediately after this 5-minute close, maybe taking one off. And as soon as I see us pulling down below this level, I'll get out the rest of the contracts for break even. So this most likely would have been a small winner. The target would have been probably somewhere around 212, even I think 212.40 area, and that would have been it. So again, no follow through on that, which really sucked, but it would have been another decent setup as well that could have been possibly taken. Square, just want to go over it. I definitely wouldn't have taken this. I mean, I might have taken this actually. Yeah, I probably would have taken this. Let's just say let's just say I would have taken it. And targeting 255-ish area. I probably would have taken this as soon as we saw a push above 253.5, but I would have exited as soon as we closed below this 253.5 for possibly break even, a small loss. And the market with zero follow through, again, making it extremely hard to trade in this market. And this probably would have been a good setup as well. You can see there's a nice lower wick here. We have actually somewhat decent volume on this name here. Nothing too crazy compared to anything else. So again, I would have probably entered a very, very small position and would have been extremely cautious if we pushed up to this 254.5, 255 area. I would have taken profit. It would have been very quick, but because we got crushed here, and I would have exited for most likely like I think it was like a 20 cent, 30 cent loss on the contract. And finally, Roku, which is what Dylan and Carmine took. Let's just go over that real quick. This was not in my plan just because I don't really watch Roku, but I think it was interesting to see. This obviously had a huge amount of relative strength here. I know that Dylan took it right as we broke 320. Carmine took it right around as we broke 325, so a little bit more conservative. This really doesn't suit my style. I'm trying to learn how to play the first 5 minutes. And if we just break it down on a 1-minute chart to see it a little bit clearer, let's get into that. You can see that Roku obviously had some ridiculous volume compared to previous days, and that is the telltale sign. We also had insane relative strength here, even though we kind of based down here. That's just the shorts, that's just the longs covering from their nice gap up overnight, taking profits. And then immediately we see this nice huge candle. So as soon as we see that kind of momentum going in, and Dylan bought right here, targeting 327, which was an amazing trade. Hopefully I get to that level one day. But I probably would have taken it, honestly, right around 932. As soon as I see this push up, rocket ship technique bouncing off VWAP, holding above, anticipating the 325 break and targeting 327. That's probably where I would have entered, just given my current skill strength or skill level. And yeah, it would have been a nice little winner on the day, and probably, of course, the best trade possible. So those are all the setups I want to go over today. I hope you guys learned something. I know I did. And see you in the next video.